start with this. I'm going to share my screen, do a little bit of an introduction, and then we'll be probably able to start with the normal. Okay, can you see my screen now?
Yep, it's all looking good.
Okay, very good. So let me start from the beginning. I'm just going to do a little bit of an introduction, and then I guess we're going to do the simulation where you'll be able to give me your inputs and essentially look at what the potential outcomes could be. If you can see my screen, that's good. Can you?
Yep. Yes, that's great.
Okay, very good. So let's start with this. So today we're going to speak about the global monetary war game, CBDC and crypto. So it's basically a capital war simulation. So we know that the war can be expressed in different terms, right? It could be military war, it could be trade war. Usually it starts with a currency war, then it switches into a trade war, and then eventually it goes into a full-blown out war where all resources are put into place in order to win that war. One of these resources is technology, but also capital markets and the global financial system. So we're going to focus on the financial system for now. Okay. So I'm going to move on. Who are the players? So essentially here I have selected a certain number of players that are the most relevant. Of course, there's more than that, but let's say that the ones who actually have a shot at doing something meaningful during this war are those players. So there is the private sector initiatives. In this case, for the crypto, it translates into Bitcoin. That is the most relevant when it comes to the very neutral parties. There is AGA, or kind of like a mix. In this case, this is my project, but it reflects something that has to do with physical gold backed crypto. So it's kind of a bridge between the two worlds. And then there is Facebook Libra, that is also kind of a bridge between fiat
DMI cable
and full crypto.
We have a HDMI cable.
Or Takehima need to mute their microphone.
Okay, so if we can
now,
go through,
like half an hour.
If we can go through
right?
the meeting.
Can I get it? Just remember the one I started now, like 15 minutes late.
I think someone is speaking, VSS.
Check the link I sent you. I think you'll find a lot of good stuff.
Is there a way to mute?
Yeah, like
VSS?
now, there's 5 going on, but there is one that says that we are going to starve.
Okay.
Food, and then there's another one.
Are you still following or not?
I think it's in half an hour, but I'll tell you.
Hello.
Thank you.
Okay.
Hello.
Still working.
Hello.
Yes.
Yes, I hear you. But who is this other person who's?
I don't know. I think it's VSS was actually there. So let me just. Okay. Well, let's continue. Then we have the semi-private initiatives, and I think it is important also to mention because the we need to know that the Fed in the US is actually a private institution, but we call them semi-private because we know that there is a huge influence from the government, and so is the case for the central bank. There are also the Central Bank of Europe. They're also a private institution, but they also are highly politicized. So that's why I classify them as semi-private. And then you have the rest of the world, who usually follows pretty much the same model across central banks. Then we have the real hardcore, let's say, public or supranational international organizations. First, you have the Bank for International Settlements and the two institutions that were created with the Bretton Woods system initially, which is the International Monetary Fund and the World Bank. On top of that, you have the fully public owned central banks, such as the Public Bank of China, which is one of the most relevant right now when it comes to that project. So everyone has their respective projects, such as the digital renminbi. The rest of the world is also working on their own initiatives, and the most relevant are the digital euro, and we are hearing a lot of speculation about Fed coins. Of course, we see all the private initiatives on the one side, and we can also speculate the potential digital SDR. This is for the purpose of this simulation. We're going to be taking then some assumptions that the USA and China are at war, so either declared or undeclared. That means that these two cannot really ally. The global economic situation is more or less similar or parallel to the 1930s. We see debt levels very high. We see great deleveraging, which would be a parallel to the Great Depression, meaning a recession plus a tendency of asset crashes. We see that the war will be able to include 5G, blockchain, AI, IoT, and also chemical. We're going to focus, of course, on the financial. The war started with a currency war, then a trade war, expanded into a military and technological war, and that's basically the assumption and the setup for the initial situation. In the initial situation, we see 5 blocks. We see the Chinese aligned bloc, the USA aligned bloc, the private sector aligned bloc, the international organization aligned bloc, and the non-aligned bloc. The rules of the game and the objective is for each block of these 5 to essentially become the world's most used reserve currency or to align with the winner. Okay, that's the rules. And a player cannot make a decision against the block if the degree of influence of that block is higher than 60%. The degree of influence are mainly determined by political alliances, trade balances, and capital balances. So, for example, if there is a classical political alliance between the USA and Europe since the Marshall Plan, we need to know that in order for this political alliance to break, the European Union needs to break for some of them going to some other blocks. And for the trade balance, it's basically the same thing when it comes to trade relationships. So these are the blocks, correct? You have the initial setup with the capitalist block, which is basically private sector, who wants more, let's say, free competition of monies, if you want. You have the Fed aligned block or the USA aligned block in blue. You have the globalist block, which is the green. And then you have the rest of the world, which is kind of neutral. And then you have the Chinese bloc that is mainly fighting.
Yeah, I think I mentioned that too.
Okay. So then we have, I'm going to skip a little bit this, but we have basically a parallel with unsustainable debt level, deflation risk, Chinese rising power, as opposed to back in 1930s, the American rising power. And then we have high economic disparities as well. That's similar to the 1930s. Now we can know, the reason I'm putting this here is because we can see on the Great Depression relative to what the currencies are behaving. Usually the reserve currency, in this case, is the US usually actually goes up because of the leverage due to the depression. Okay? So now we also have to just take into account that usually debts are cleared off, or there is some sort of relief and an aftermath after huge deficits. So we need to take into account the maneuver of the central banks and the government in terms of the dilemma that they have. So the first tail risk that they have is to, particularly in this COVID crisis, because this is kind of the trigger of all this, we see that the tail risk is that there is no fiscal and monetary stimulus, neither from government or from central banks. This is a tail risk because it can cause an economic crash and an out of control deflation. Okay, so the result of that is financial deleveraging and basically sovereign debt default. The second tail risk is the fiscal and monetary stimulus. So that means that you actually do fiscal and monetary stimulus. The tail risk on this side is unsustainable debt burdens, which essentially which eventually will be cleared off, and runaway inflation. So usually the result of this is debt monetization, meaning lots of inflation. And the tail risk here is the loss of confidence in this sort of currency. So it's not necessarily the best solution either, but it's in a lot of people's opinion the most likely one. Okay, so now we have one particular basically question that we will go back later, which is about the SDR and the different mini scenarios inside. So I will need your input here for these different scenarios, probabilities of success, conditions, outcomes, and likelihood of that happening. So we'll go to this after. We have the dependencies and the global scenarios. So essentially, Europe can either win with the digital euro. I see that as not very likely. We can have the euro losing with the SDR joining the two camps of Europe and USA. Okay, and then you can have Europe refusing to join the SDR because of political independencies, and also to block Libra or other private initiatives. Then you have the dollar, who would be the digital dollar winning, the SDR winning, well, the USA winning through the SDR because they align then Europe. And then you have the USA basically not being able to push for this SDR and then backing up from the back door an SDR light, if you want, through Libra. You have China potentially winning with the digital renminbi. Mostly it would be through the Belt and Road Initiative that aligns with China. And then you have the neutrals, which basically could only win if the Chinese-USA war upsets the neutrals, and that there is a refusal overall to have a two-master system, and the Belt and Road Initiative, as well as maybe perhaps the international organizations, join them. So here you see the globalists also potentially winning by consolidating this. So the first scenario is China winning first by taking the rest of the world, and then collapsing the digital euro because of the coronavirus crisis. Just puts a lot of burden, and they push for political breakup, and or also increase an influence on whatever the international organizations, which we have seen already happening. So this is the first scenario. We'll go through that later to have a vote on who thinks this is the scenario that most likely will win. Then there is the second scenario, which is the USA, basically taking first the rest of the world and also pushing the private sector. So by pushing the Fed coin essentially through a lot of private sector initiatives, and also taking over, basically merging into a new digital dollar, and from there also gaining influence in international organization, essentially winning this game. Then you have this scenario 3, where there's a lot of blocking, but still lots of regulation. And so in this case, the private sector is losing because of the regulatory burden. But you see kind of like a new world order made by a coordination through the international organizations and banking system, essentially solving a status quo between the USA bloc and the Chinese bloc, potentially a digital SDR with a higher inclusion of the Chinese and some sort of a proxy voting onto the management of that, and the rest of the world's just following. And then finally, you have the neutral capitalists winning, which is the scenario 4. This is probably going to stay as an underdog. So what would happen is essentially, because there is an upset of this fight, essentially the rest of the world will first refuse to align either with the American bloc or the Chinese bloc, and they would go through just a private sector kind of like a mass adoption of Bitcoin, AGA, or Libra, or other type of private initiatives, and so that would be big enough to actually expand into the capitalist, into the free market so-called world, if we can call it this way, and then eventually having a free competition of monies where everyone is existing and eventually one will come on top. So that is about it. I think we can go back to the scenarios. I'm willing to just hear you about what do you think is the most likely scenario. Maybe we can go one by one first, giving 5 minutes to everyone. If you want to go back to a particular kind of slide, do let me know. I think one of the ones that is interesting is to know what the SDR could be playing, but please let me know. So I'm gonna let Stephen speak.
Thank you, Thierry. This is great presentation. I mostly want to listen, so I'm just going to pass. I'll let another person speak.
Okay, so Joe. Do you have anything to say?
Joe, yeah, I didn't know you were going to be talking to me. Cool. Well, I think that you didn't talk too much about gold in here, which is interesting. At least I didn't hear it.
Well, actually, that's included in the private. It's included in the private initiative, and I think it's a very good point. You can either go through gold like this,
oh, yes,
or
there it is.
With us, or similar initiatives. Or the good point there that you make is that eventually, if you see an upset of fight between the Chinese and the Europeans and others, right? One of them can choose to basically, once the currency war is over and essentially the race to the bottom is done and people lose confidence, then they can reach back that confidence by pegging their currency back to gold because of the huge amounts of reserves. And that could be an action card, if you want, both from the USA. Actually, the IMF has quite some gold holdings, and also the PBOC. So that's a very good point.
So it's a way to restore confidence in the currency as it's collapsed.
Technically, usually, yeah, I think that's a very good point, because usually you do see a race to the bottom during a currency war. And so that is actually eroding value, eroding confidence. But once ultimately, a currency war is basically the ugliest pageant wins, right? But at some point, you have a trade-off on the confidence side, and when the rest of the world would want and basically demand a stable currency. And in order to back the confidence, usually you would see some sort of a Bretton Woods 2.0.
Okay. Yeah, it's the SDR thing. I think that thesis is that's, I think, what's his name?
Special drawing rights.
Rickards has been talking a lot about that. I haven't heard anyone else really saying that, so it's interesting that you're really digging into the IMF money.
Well, actually, there's a person called James Rickards. He's
Jim Rickards,
in the gold in the gold industry. He has been speculating a lot about an SDR. I think the SDR has kind of two components, right? Here you have the first SDR version, which is the version we have today with an overweight of US dollars, right? And then a very small yet present, well, relatively present Chinese renminbi. That's a change that was in 2016. So this is relatively recent. If the Americas, basically, who essentially more or less are overweight in controlling the International Monetary Fund and the World Bank, want to align the European Union by trading off a little bit of the power of the dollar for aligning the Europeans and the Japanese and the British, they could then manage the SDR through that global organization. If there is a lot of reluctancy because of the change strategy in let's say in China, in China's culture, right? The change strategies, you let your enemies to have a lot of allies, so much so that they become stuck. They cannot move because reaching consensus becomes impossible. That is an eventuality that can happen. And so in that case, most likely, I speculate, okay, that this SDR would be pushed through Facebook as a alternative SDR, which would be a basket of currency like Libra, but a private initiative, and they will be able to be a lot more. They wouldn't have to ask for permission. They would just do the SDR and maybe even have the flexibility of kicking out the renminbi, so that there is no change to be done on the SDR, and so that Libra project would be pushed forward.
Especially since China doesn't allow Facebook. That's interesting. So how do you invest around that? Do you have some crypto and you have some gold and you can't.
Well, I mean, you look at how do you invest around it. I guess it's really more about the blocks, right? And where you position yourself in terms of what do you think is the most likely outcome, right? So you can be on Bitcoin, you can be on gold, you can be. The problem with currencies is that most likely you will first see a lot of depreciation on the currency war first phase. So you will want to basically be in dollars at the bottom when there is the restoring confidence phase, which could be done by either a global Bretton Woods 2.0, new monetary order if you want, or it could be done by just taking over certain parts of the world through other mechanics, right? Trade deals and things like that. But you would want to pick it at the bottom, and same goes for the digital renminbi that could easily win a lot of the Belt and Road Initiative. Here we need to notice that there is two sides. There is the others, which is the rest of the world, and then there is the Belt and Road Initiative, which is a little bit of a special case, because a lot of these countries have debt with the IMF, so they would be somewhat linked to this very interdependent linkage between the USA and those international organizations. And at the same time, they have a lot of trade deficit with the Chinese. So that puts them in a position where it's hard for them to choose between the two. So the scenario says you can either choose one for the victory, or you can stay non-aligned and basically seek for international organizations to come up with a new order, or just because of these can take a lot of time, they can just adopt one of the private sector initiatives and essentially by de facto picking one of these solutions, and create a new some sort of could be a gold standard, it could be other things. So this is basically what I call the scenario 4. But the scenario 4, in my view, is less likely. I don't see a complete private sector dominance of all. I would see still, in the best case scenario, a private sector kind of purely, if it's a purely private sector, it would probably be an underdog for a long time until eventually, let's say, fiat currencies collapse. But that would play out most probably in a long time.
Okay, so sit in dollars for now.
Sorry, say again?
So sit in dollars for now.
There is a case to be made for dollars when you look at the situation in 1930s, which is very similar to today. When you saw a Great Depression, the value of the dollar, which overall clearly not the store of value, okay?
We need to continue. This first session should be over and we should move on to the second one, please.
Okay.